Alright everybody, it's Josh Taylor, and I have not been doing these videos for quite a while. We're going to start getting back into these videos because I'm getting a lot of clients asking for the market updates. So I want to talk to you about today the Euro USD and why this market has been so tricky. So let's look at the daily chart first of all. You can see for quite a while the Euro USD ever since 2013 around spring has been working its way up. You have highs going down to a low, to a higher high, to a higher low, higher high, higher low, and it's continuing to work its way up. Now, ever since, let me zoom this in a little bit, this date right around here when you had a huge rejection of this 139.40 mark, and it also was 1.4, that price has really hit around May 8th of 2014. Has really pushed itself down. Right now, as I'm shooting this video today, it is October 28th, 2014. So we're talking about a little over 5.5 months later, pushing 6 months, and we've seen a massive reversal on the Euro USD, and it's been pushing down very, very strong. The problem with a trending market. Now, here's the deal with a trending market, and then this is the trick where we're at right now of where we've been since October 3rd of 2014. In fact, this month in October, I'm actually down about one trade. Usually, my average trade is about 80 pips. I'm down 113 pips. I'm usually up about 500 to 600 pips a month, depending on the month. But this month has been really tricky. I haven't taken a lot of trades because of what we're looking at here. You can see that the market has pushed, and the trick is you don't know that this bounce here off 12500 is, and it slowly starts creeping its way back up, right? What most traders are doing now is saying, hey, the US dollar's now reversing again, it's going back up, so we're going to start buying, and just when you do, it dumps off again. So what we are seeing is this downward pressure slowing down, and now we're seeing highs come down to a higher low, and now we have to determine if we get this thing up here. That what we don't know is if this down in here is a reversal of this long downtrend, 6 month downtrend, or if this is simply a retracement where this downtrend is going to continue. Now, so this is the trick about trading forex. And when the market ranges, you know, you've watched my videos talk about trading the range bound market. In my opinion, trading the ranges is by far easier than trading trends because of when you have a strong downtrend like that, you can get very stuck and try to figure out where the market is going to go. If you go back and look at the weekly chart, same thing. Ever since the same time, it's just every week this has been dying, pushing down. We're at 12500. We're seeing a reversal, but we don't know is if this upswing that we're in right now is nothing but a pullback on a continued downtrend. So the trick is we don't know if the market is now reversing or if it's just breathing a little bit and the market's going to push down. So when you're choosing your trades, be very, very careful with that. That's why I always find it easier to trade ranges. Let's talk about trading ranges a little bit. As we're looking at this Euro USD chart, if you look here, you can see I've got some support and resistance lines laying out, and a Fibonacci line pulled from this low to this high, and you can see some major points here. But you can see that if you were trading this off the weekly charts, you'd have to have a decent stop loss. This bottom was right around 12800, a little bit higher. You'd have to be putting a stop loss right below here, or even here. That's a huge stop right there. That's a good 150, 160 pip stop. Or you could even do it here if you want to tighten up. You'd have to have at least a 100 pip stop. But when you're trading these ranges and you find that, you can see here historically that those three base levels hit around the 12800 mark, also rejected here. So as we were trading here, if we would have taken a trade, if we would have broke down on a daily trade, I'm sure we would have found out it was a bounce. But as it eventually broke back up, it rejected off that again. And so now, as we talked about before, support becomes the resistance and resistance becomes support. So this is what we're looking at here. If this downward continuation is going to continue, then I would be selling around here, and I would be placing a big stop, and I would reduce my risk on this trade because we don't know if it's going to fly through this or if it's going to come up and bounce. It's been working on bouncing, but what we don't know is if this is a continuation or if price is going to go back up into the original range. So let's go look at some other pairs here real quick. All right, so here I am over at the Euro Yen, and you can see on this is a weekly chart, and price for the longest time on this pair since mid 2012, this puppy has gone up. Oh my gosh, I'm trying to count here how many pips this thing has run. It looks like 5,000 pips. So it's pretty significant what we're looking at. But what we want to focus on here is this range that this pair has been in. And even now, over the last couple of weeks again, the pair is beginning to push itself back up. So we're starting to see some momentum again on the euro against the yen. The only thing we can do is go down to the daily chart and take a look. So I can back out a little bit. You can see it's still working its way up over time, and that price has continually bounced off of this 136.52 mark. Right? I'm going to darken this up a little bit for you. Say thickness. There we go. All right. So it did have a huge rejection down here. There might be a good opportunity for a bounce on this pair if price came down again to the 136.50 mark, especially that we are up 120 pips higher than that right now. So a lot of times what will happen, a news announcement will come out that'll be either negative euro or positive yen. It'll temporarily bounce this thing down to take us into a good support level, and then as the market chills out a little bit and realizes, oops, we don't need to be so drastic on our selling and buying, then it'll work its way back up. I'm looking at this and starting to see what I'm feeling. The pattern is, even though it's slowly been pressurizing itself down, I'm seeing that we're reversing around here a little bit. So I would be looking for a buy opportunity. We're 136.50. If it starts getting down into this range below and starts not seeing pressure relief, if it breaks below it too far, I'm going to pull the plug early on that trade. But that's another trade. Let's go look at another pair. All right, so for the last trade, I'm going to look at the pound Aussie. Now let's take a look at the weekly chart. First of all, see if we see anything on here. Well, we can see that this pair gets really range bound. You can see on the weekly chart that if price came down to this almost 1.8 mark, it would be a great opportunity to take a buy. And we do see some downward pressure, so I would be taking a buy opportunity right there at 1.8 or $1.80 actually. Okay, so and then same here on the daily chart. It's a little bit different. There is actually in 1.8, the $1.80 is right here. Let's move this up a tad. Okay, that was the one we saw on the weekly chart. You can see here, there's, even though prices broke through lots of times, there is some pretty solid support here. It gets range bound between that and the 81.50 mark. The 81.50 seems to be a solid base level too. And we are, this pair can really move. I might be willing to take an opportunity, a trade opportunity at 81.50. I'm looking for a small bounce, but we still do see a little bit of a wedge downward. We're still seeing high, low, high, low, high. I'm expecting this low to come all the way down a little further, so probably not going to take that one because in this case it's 70 pips away, but one powerful day this pair can really move pretty substantially. But that's there are opportunities to be watching in there. I'd keep an eye on the 81.50 mark and the 80 mark, the 180 mark. Don't necessarily know if I'm going to take a trade yet on those, but I'm going to watch them very carefully. So that's all for today, folks.